Okay, hang on a while. Okay, while we set up our YouTube first. Okay, good. Okay, I think everything is set up. Okay, yeah. So we are having multiple channels of sharing this stock market info. Okay, so both you can actually tap into our Facebook as well as YouTube. Okay, so in future we are going to have a lot of YouTube live sessions too. If you want, you can always do a search. Okay, our YouTube is called Daniel Low Investment. You can like us. You can like us. Then you can revisit this video again and again and again. Okay, the thing about Facebook Live is after this session, of course, is inside our page, but you won't have any more notifications. Okay, YouTube, you can always do a search. Okay, so you can actually like us both in Facebook as well as on YouTube. Okay, so today it's all about understanding the market. What is the market going to be in the next few months? If some of you have been paying attention to what we have said, on the 8th, on the 9th of March, okay, we did predict the bottom of tech stocks. Okay, if some of you know, you keep track of technological counters all over the world, we have almost a collapse in January. Okay, so let us take a look at some tech stocks over the last few months. Okay, so of course, I'm going to bring out my chart and I want to show you Nasdaq Composite. Okay, what happened to Nasdaq over the last few months? Okay, there has been a big correction. I won't say it's a collapse, but it's a big correction that happened to tech stocks in the period of February. Okay, so a lot of tech stocks all over the world, not only US shares, uh, Taiwan technological counters, China tech stocks, Hong Kong tech stocks, or those tech stocks that are listed in Singapore, all dropped in a span of 1 month, somewhere to the magnitude of 20 to 30%. Why? Because the index dropped. Okay, Nasdaq Composite, which comprises a lot of tech counters, it dropped from almost 14,000 points. And later I'm going to explain to you why. Okay, why tech stocks dropped from almost 13,900 points. It dropped to as low as 12,200. Okay, so I'm using my pointer to show you this is almost a 11 to 12% drop in the span of 1 month. And that's the reason why a lot of you have been investing in EV companies, right? Electric vehicle companies like Tesla. Okay, one favorite stock of mine last year, okay, it was Tesla. It has dropped from almost $900 to 550 points. That was almost a 40% collapse in price. By the way, a stock, if it drop 40%, it's amazing drop. Okay, amazing drop. And it has not recovered back towards its $900. It has dropped almost $40 in the span of 1 month. Okay, and of course, if some of you, I have a lot of friends have been investing in this stock called NIO. NIO has dropped from almost $67 to as low as $33 in just 1 month. So that is what I call the tech stock collapse. Okay, tech stock collapse in February. And what happened is, ever since February, ever since March, we did issue a buy call, okay, a buy short-term call to buy back all these tech counters. Okay, so if you have been keeping track of our Facebook Live, okay, our Facebook page, okay, which is called Daniel Low Investment. Okay, Daniel Low Investment. If you have been keeping track of our comments, okay, let me go through some of my comments. Okay, in Facebook. Okay, wait a minute. How do I go to Facebook? Okay. Okay, if you have been keeping track of our comments, we did say on the 9th of March, okay, on 9th of March, we said time to accumulate all these tech stocks gradually because of this 20 to 30% collapse in price. Okay, so a lot of tech counters, even Apple, one of my favorite stock is called Apple. Okay, and I want you to keep track of this stock over the next 2 years because of the expectation of their 5G iCar. Okay, 5G related iCar. Okay, so they are going to launch in 2024, most likely in the third quarter. Okay, that was mentioned by its CEO Tim Cooks. Okay, so I would expect, okay, going forward in the next 2 years, there will be a lot of expectation of this, what we call the first smart car on earth, okay, and probably it will be 5G enabled, okay. So yeah, what happened to this stock? Okay, it has also dropped. It's a FANG stock. Okay, it has dropped. Okay, from $145 to as low as 116. Okay, that is almost a 25 to 30% collapse in price. Okay, which I think is great. Okay, it's great. But what happened is that very day when we publish to buy back the tech shares on the 9th of March. Okay, you can see the date on the 9th of March. That was the lowest point of this stock called Apple. Okay, and that was also the day next that actually dropped to the lowest point. Okay, so if you buy Apple, if some of you, okay, have been following my threads, if you have been buying this share, just give me a one sign. Okay, can you give me a one sign so that I know you have been buying this stock? Okay, Brian said tech stock is buy on dream, sell on fact. Okay, yes, correct. Buy on dream, sell on fact. Okay, because buy into the future. Okay, when the news is out in the market, you should sell. Okay, that I agree. Okay, that I agree with Brian. Okay, thank you, CC Lau. Okay, you have bought some perhaps some Apple. Okay, thank you so much. Okay, okay, let me, okay, because the comment is pretty narrow, let me try to see. Okay, oh, Keith, you have bought some tech shares. Okay, Lee Su Wen. Okay, thank you so much. That is exactly the bottom. Okay, the bottom happened, okay, all over the world on the 9th of March. Okay, to technological sector. Okay, so not only that, okay, one another favorite tech stocks of mine is called Nvidia. Okay, Nvidia also bottomed at around $464, which is part of what we call the 5G chip maker company. Okay, so it also bottomed on the 8th of March. So if you were to buy in, when I say there is a bottom in technological sector, if you were to buy in, you buy in at somewhere around 470. Today you'll be making somewhere around 100 plus bucks, right? And the highest point it reached is $650. So you can see there is a general, what we call a bottom, okay, among all the tech stocks on the 9th of March, okay, on the 9th of March or 8th of March, okay. So not only Nvidia, a lot of tech stocks actually bottomed that day, okay. Uh, for example, okay, recently Netflix actually dropped a lot, okay, but before this drop, okay, before the earnings announcement yesterday, it did climb up from almost 8th of March, the bottom of 492 to as high as $560, okay. But then again, this stock, I would say there has been a 10% drop yesterday, okay. So going forward, I would say this stock is a good to have, okay. It's a good to have. Every time the market corrected, it's time to buy in, okay. Thank you. I bought Alibaba, still sleeping. Okay, thank you so much. Okay, okay, Alibaba, of course, is another stock. Okay, but not only uh, uh, I would say is a bit different from other tech counters in the sense that is having some political issue, of course, with the China government, not only with US in the past, but also with China government. Okay, but the issue with US has been over. Okay, under Joe Biden administration, I don't think any China listed company will be delisted from US. Okay, so that episode is over. Now the real concern comes with, okay, whether the China government is going to deal with this company as well as some China tech stocks. Okay, so Alibaba recently got a fine, as some of you know, which is all-time record fine. Okay, in China, roughly around a $2 billion fine. Okay, so that's the reason why it has been a bit of bounce, okay, from $220 to as high as $240, but it's back down again. Okay, it's back down somewhere around $230. Okay. But the thing is, I do feel going forward in the next few months, okay, if this stock does drop further, I would say it will be pretty resilient. The general support is somewhere around $220 to $230. Okay, the episode of the political issue with China government, I would say, has been almost over. Okay, uh, and it has already been priced in. And number three, I would say Jack Ma is going to perhaps, okay, relent on his position. Okay, he will be less aggressive, and most likely he will relinquish his position in Ant Finance. Okay, so probably he will hand over to another CEO, this company, and he will try to sell some of his assets back to China government. Okay, so I would say that will probably end the whole episode, okay, with the China government issue. Okay, so most likely there might be some bottom. Okay, there might be some bottom. Okay, but having said that, if the whole market does correct, you might buy at a cheaper price. Okay, this stock. But what I like about this stock is at least the standoff with China government has already been almost over. Okay. Okay. Jeffrey say any 10 bagger company to share. Okay, thank you. Okay. So what Jeffrey says is 10 bagger means a stock that can increase 10 times its value. Okay. Um, okay, please write down. Okay. A 10 bagger stock to buy this year. Can you please write down? Okay, I'm going to tell you the answer. Okay, just write down in your notes what is a 10 bagger stock. Okay, 10 bagger stock, that means there is a chance this stock might increase 10 times this year. Okay, so if you want to know a 10 bagger stock, can you give me a one sign? Okay, just give me a one sign. Let's have some participation. Okay, so if you want a 10 bagger stock this year, okay, last year Tesla has been a 10 bagger stock. Okay, I recommended a stock called Tesla. It has run almost 10 times its value. NIO is a 10 bagger stock, if some of you know. Okay, Singapore we have AEM. Okay, also another 10 bagger stock. Okay, so a lot of stocks actually ran 10 times in the span of 1 year. So if you want to know, okay, today my recommendation of a 10 bagger stock. Okay, can you give me a one sign? Please write down the answer. Okay, this stock, please write down. Okay, please write down the answer. Okay, the answer is no more. Okay, please. Okay, please abandon your dream of buying a share that can increase 10 times this year. Okay, today I'm pretty serious about it. Okay, this year I'm afraid a lot of stock investors will suffer. Okay, last year, yes, it has been a dream year for all of us, but we are entering the second year of the bull market. Okay, I don't see another stock this year that's going to increase 10 times in the span of 1 year. Very tough market to be in. And that's the reason why today I call for this meeting with all of you, okay, to explain to you what might happen this year so that you get yourself mentally prepared. Last year was an extremely unusual year. A lot of asset classes went up multiple times. Today you look at crude oil, okay, today you look at crude oil, okay. Thank you, Andre, for your smile. Okay, thank you so much. Okay, today you look at crude oil. The price of crude oil is 60 bucks. Last year, the price of crude oil, the lowest price it reached is $6, right? Okay, if you are talking about the futures price, it has increased almost 10 times its value. Okay, you look at the digital currency world. Okay, a lot of digital currency has also increased multiple times. Okay, almost more than 10 times its initial value last year. Okay, a lot of stocks like GameStop, stocks like Tesla, NIO, it has increased more than 10 times its value. But this year, I'm afraid there won't be such shares anymore. You are going to go back to reality. And the reality is every year, your index almost goes up only 20-30%. At most, at most. Last year was an unusual year. Last year was was COVID. Okay, last year was COVID recovery. Okay, it's really okay. We are recovering from the COVID crash. Okay, and that's the reason why S&P 500 from almost the lowest point of 2002 today you double up. Okay, it has almost went up almost 100%, 100% in the span of 1 year. But if you know the whole broad market, definitely, okay, this trend cannot continue. It won't double up in the next 1 year. It won't go up to 8,000 point. Okay, so most likely the reality will seep in, will sink. Okay, and most likely at most, okay, this index at most it will go up on, okay, an average of around perhaps 10 to 20% return. 10 to 20%, and that means there won't be any good stocks that might increase 10 times its value. Okay, if it does, it will be very unusual. It will be very unusual. And definitely, I'm not looking at crude oil multiplying by 10 times its value again. Okay, so it's already almost at the peak, I would say, this year, okay, of around 70 bucks. Okay, so I'm looking at crude oil peaking at around 70 bucks this year. I'm looking at a lot of index peaking at the top. Okay, so there will be instead a sideways market. Okay, a sideways market. Okay, so yeah, by the way, really no more stock. Okay, thank you, morning come. Okay, I will say there won't be 10 bagger, but you can make some money out of it. Okay, if you really buy upon any correction, there might be a chance you'll be making 20-30% or even 50% return in that particular stock. Okay, but I'm not looking at 10 times anymore. Okay, so forget those so-called YouTuber gurus that tell you this is a 10x stock. Okay, I hear enough of this nonsense. Okay, last year it has been a tremendous year. A lot of 10 times or 10x YouTube gurus were born. Okay, but this year it's time to face reality. Okay, those teenagers you are looking at, okay, that have not really experienced what we call a market correction. Okay, yeah, they may promise you this is a 10 bagger stock. Okay, but it's time to face back to reality. Okay, normally a stock that can increase 20, 30, 40, 50% in a span of 1 year is considered quite a good stock. Okay, if you do manage to buy at the bottom. Okay, if you manage to buy at the bottom upon any correction. Tanya said US government is still printing money. Okay, yes, it's true, it's still printing money, but this year the effect will be gone. Okay, later, I'm going to share with you a lot of proof in history. Over the last 30 years, US government has been printing a lot of money. US government, every time there's a recession, they will print money. They will print trillions and trillions and trillions of dollars to save the economy. And that's the reason why the first year is an ultimate year. Okay, the first year, the index can increase 100% return. Okay, but it doesn't happen every year in a bull market. Even if the bull market lasts for 10 years, not every year your index can increase 100%. Okay, it it will only happen during the first year of bull market cycle. Okay, thereby following which every year in the bull market, okay, there will be a slight increase, increment of perhaps 10 to 20% every year. Okay, in the bull market cycle. Okay, and there can be even some bullish years whereby it doesn't increase at all. Sometimes it even drop because of some big correction. Okay, so I would say, although I said that 9th of March you can buy into tech shares, but this is a short-term trade I'm referring to. I I don't foresee that technological stocks can increase multiple fold in this year. So if you have been making some money, if you have followed my thread, on the 9th of March, you buy into some tech stocks, you buy into good tech stocks, you buy into NASDAQ, you buy into Apple, you buy into Nvidia, it's time to take profit. It's time to take profit. Please take some profit off the table, okay? Because the stock market is going to come back down again and for you to buy in again, okay? So it will be a sideways market this year. You got to know when to sell, okay? Not enough to know when to buy, but you must know when is the exact right time to take profit. Okay, so I would say in the last 1 month, a lot of tech stock has already revived. Okay, it has already gone up almost 10 to 15%, some gone up 20% return. It's time to take some profit off the table again. Okay, wait for another correction to come. This year it will be pretty sideways. Okay, good. What about solar stocks? Okay, green energy, I would say, in general, in the last few months, it hasn't been that good. Okay, of course, uh, there's one solar stocks that I definitely like. Okay, and it's called First Solar. So ever since November, when Joe Biden got elected, okay, this stock has been running from 80 bucks to $112. But you can see the decline in green energy companies over the span of last 2 months. Okay, ever since the Nasdaq drop, okay, First Solar has also dropped along with it. Okay, but now is pretty much at a very stagnant stage. Okay, so somewhere around 80 bucks. Okay, so like what I said, there may be a chance that First Solar will go up, but I don't foresee it to double up in 1 year. Okay, so make sure you know when is the right time to sell. If you buy at the support somewhere around today, $70 to $80, I would say there might be some support here. Make sure you know when to sell. Okay, the resistance, I would say it will be somewhere around $100. Okay, I will take some money off the table when it reach 100. I get a 20% return. That's good enough for me. Let go and buy in again if there is some correction. Okay, so let us get started. Okay, I try to answer some of your queries initially, okay, while waiting for some of our participants to be here. So if you are in the room now, let me just get started with my PowerPoint. There are a lot of things to share. Okay, and today I'm going to share with you some historical stats. Okay, what happened in the second year of this bull market cycle. Okay, so let us take a look at our STI. I do understand some of you really like Singapore shares. By the way, if you have been buying Singapore shares over the last few months, can you give me a 2 sign, okay, so that I know you're good with Singapore shares. So you have been buying Singapore stocks, give me a 2 sign, okay? Thank you, okay? As well as give me a thumbs up if you want, okay? Okay, just give me a 2 sign. Let me know. Okay, who are the ones that are buying Singapore shares? Okay, if you have been buying Singapore shares. Okay, the last 1 year, the last few months, it has been quite good. Okay, it has been quite good. Okay, let me see the comments. Okay, thank you, Desmond. Thank you, Xiaobao. Okay, you bought in SIA. Okay, Suling Co. Thank you so much. Okay, Capri. Thank you. Okay, Tesla, hold or sell. Okay. Later, I will share with you more about Tesla. Okay, similarly with all tech stock, this year is going to be having a sideways market. Okay. Okay, if you have been buying Singapore shares, it has been a good few months. Ever since Joe Biden got elected, Singapore shares generally has been on the uptrend. Look at your CapitaLand, look at your SIA, look at definitely the SPH has been running crazily over the last few months. Definitely, for example, our DBS banks, all the banking stocks has been really marvelous. Okay, so generally speaking, okay, ever since last year COVID, okay, Singapore STI has bottomed on the 23rd of March. Okay, on the 23rd, at the top here, okay, is a comparison between Singapore and our US S&P 500 index. Okay, so you can see, okay, look at my mouse. Okay, STI has been falling like a rock. Okay, when COVID happened in February last year, and it did indeed bottom at around 9 of March. Okay, 9 of March at exactly 2,200 point. At 2,200 point. And ever since that day, what happened? It has been on the uptrend, right? And today, this index is lying somewhere around 3,200 point. Okay, around 3,001 to 3,200 point. Okay, it has been on the uptrend, so it has increased almost 1,000 point. So generally speaking, this index has been in the bull market cycle. Okay, so it's what we call the first year of bull market. So let us compare what happened to S&P 500 index. This at the bottom is the S&P 500 index. S&P 500 index, you can see it does top similarly to STI. It topped at around 3,400 point or 3,300 points. Then because of COVID, it did drop. So it dropped to the lowest of 2002, exactly the same as STI. On the 23rd of March, both of them bottomed together, right? And ever since that day, S&P 500 has been rising to today all-time high figure of around 4,000, somewhere around 4,000 100 plus points, right? Okay, 4,001 to 4,200 points. It has been an amazing recovery. Okay, amazing recovery. Okay, but let us take a look at what about other indices all over the world. Okay, this is a comparison chart between our Singapore STI and Nikkei 225. Okay, Nikkei 225 represent Japan index. Okay, so on the top is the STI chart, and at the bottom is the Nikkei chart. So similarly, you can see that STI, okay, in February it crashed, Nikkei also crashed, right? And it reached the bottom exactly on the same date, somewhere around 16,000 point. That is the bottom, and it reached the bottom exactly on the same day on the 23rd of March, and following which it climbed into a bull market cycle, and today you're looking at around 31,000 point, right? This is KOSPI 100, okay, which represent South Korea index, South Korea Composite, okay. So similarly, same thing, because of COVID, in February it crashed. It reached the same exact bottom on the 23rd of March, just like STI, and today is climbing to its all-time high figure from almost 200 points. Today is around 430 points, okay. This is Taiwan Composite, okay, Taiwan Composite. Similarly, in February, okay, you can see it crashed. It reached a bottom of around 8,600 points, and today is at all-time high figure of around 17,000 points. Okay, it has almost double up its figure. So, what is the conclusion you can get by looking at all these charts? Okay, what's the conclusion you can get? Okay, can you please write down? Okay, what's the conclusion you can get out of looking and comparing all these charts? Okay, let me tell you my view. Okay, the conclusion is that the whole world indices follow our local STI direction. Am I right? Okay? The whole world follow our STI. Okay, when STI drop, the whole world drop together. When STI reach a bottom, the whole world reach a bottom together. When STI go into a bull market cycle, the whole world go into a bull market cycle together, right? Okay, that's the conclusion. Okay, of course that is, okay, of course that is not the conclusion. Okay, the whole world does not follow our Singapore index, but rather the whole world follow US. Follow US. Okay, so if US is in a bull market cycle, the whole world goes in a bull market cycle. If US has a big correction, the whole world will have a big correction. If US that day went to the bottom of this bear market crash, the whole world will bottom together. Okay, so the conclusion is that US is still the number one stock market in the world. Is still the brother. We are still following the steps of US. Okay, so my take for you is, I do understand some of you buy Singapore shares, some of you buy Malaysia shares, some of you invest in Indonesia shares, some of you buy Australian shares, Hong Kong shares, China shares. Okay, but you must really understand US is the big brother. US is the leading stock market. Okay, it's the leading stock market. So if US in the next few months has a big correction, the whole world will correct together. Am I right? Okay, am I right? Okay. So will there be a crash coming? Okay, later I will share with you. Okay, there will be some correction. I don't see a bear market crash. There will be some correction. Okay, so how do you understand US stock market or US economy? Okay, so today I want to share with you this. Okay, basically, economy and stock market, they are like twin brothers. Okay, if we are in a good economic cycle, normally the stock market will be doing quite well. Okay, so if the economy is bad, definitely the stock market has a chance of crashing, and that was what happened last year, right? During the COVID. Okay, because of the recession in the economy, the stock market crashed. Okay, so they are almost in line with each other. Okay, but what happened is, last year was an unusual market. Last year was a pretty unusual market. The economy in the whole world is still bad. COVID is still around, and today you are still talking about the fourth wave, right? So economy, yes, it might be recovering, but it's not recovering as fast as what the stock investors think. Okay, but rather the rise is due to something called stimulus. Okay, so this is what I call the fake economy rise. Okay, the fake economy rise. Okay, so can I ask you this? Today, the whole world, a lot of countries are still in the recession stage, right? Definitely, we're talking about last quarter. Okay, is there a need to buy crude oil? Is there such a strong demand for crude oil, in the sense that crude oil does rise 10 times its value ever since it bottomed at $6, right? There's absolutely no need. In fact, a lot of commodities has been running crazily. Not only crude oil. Okay, if you take a look at soya bean. Okay, soya bean has reached a bottom last year of $800. I'm looking at soya bean futures. Okay, today it has almost doubled up to 1,500 points. Okay, amid this COVID, is there really such a demand of soya bean? Okay, to constitute a 100% rise. Okay, What about, for example, copper? Okay, copper, industrial metals. Okay, from almost a $1.90 value, it has rise to almost $4.30. It has rise double its value. Okay, similarly, yesterday corn also reached its multiple years high of $600 from $300. It has more than double its value. So a lot of commodities, okay, be it agricultural commodities, energy commodities, what about heating oil? Similarly, it has also increased a lot from 60 cents today, 3 times its value to $1.80. Okay, crude oil increased 10 times its value. That's what we call the hyperinflation of asset prices. Okay, why is it so? When there is not much demand, when the economy is still recovering, okay, when some cities or countries are still in semi-lockdown stage, okay, the whole rise is because of the stimulus packages. The whole rise is because Federal Reserve keep on printing money almost every few months. Okay, so this rise, I would say, is pretty speculative. There's absolutely no fundamental reason of this rise. Why does a new stock rise 10 times its value when it doesn't dominate this industry? Okay, why is it Tesla is rising so fast, 10 times its value, when they are not even selling a self-driving car yet? They are still selling a model that is launched 4 years ago, and that's called Model 3. They haven't even started selling its first Rooster, which they actually launched 3 years back. Okay, they haven't even sell its self-driving car yet. And yes, a few days back, there was this news that somebody died in a Tesla car. Okay, it created a so-called a moment in the stock market. Okay, so Tesla price actually reacted to this death. Okay, and Elon Musk came out to say that this person is not using their self-driving mechanism. Okay, so it's still not safe to drive in a what we call a fully automated self-driving car, okay, like Tesla. But why is it the stock already gone up 10 times? Okay, because of speculation. All this money that's being printed by Federal Reserve, they have nowhere to go. They go into the stock market, they go into the commodities market, they definitely go into the digital currency market today. Okay, there are a lot of digital currency today. We are going bonkers, right? Okay, so why is it so? You must understand the psychology behind this game. The investor jump in to buy because investors are easily excited by the stock market, because Robinhood tell you to buy shares. Okay, because Robinhood said a lot of people are buying shares like GameStop. Okay, a lot of people are buying shares like Tesla. So you are easily excited by the YouTubers that tell you this stock is a 10 times or 10x stocks. Okay, so you are easily excited because, okay, this is what we call Reddit. There's a forum that tells you there's this teenager that become a multi-millionaire because he bought into GameStop. You jump in because we are easily excited. Okay, investors are easily excited by the market. And true enough, it does create a lot of millionaires last year. Okay, if you invest $100,000 when Tesla is at the bottom, today you are a millionaire, right? If you invest GameStop when it is bottom, today you are also a millionaire. Today, if you invest, okay, in stocks like NEO, today, okay, you are also a millionaire if you invest 100K, okay? So there are a lot of YouTubers that came out last year. Okay, we are easily excited because they create such an excitement. Okay, so this YouTuber said, okay, he go out all in. Can you see, this YouTuber said he go out all in on Tesla stock with $1 million. Okay, can you imagine? Okay, he go out all in with $1 million. Okay, today he'll be crying, right? Because Tesla went down. Okay, from almost $900 to around $600. Although it climbed back up, but I feel that Tesla will be in a sideways market from now onwards. Okay, so we are easily excited. Last year, so many 10x so-called gurus are born. Okay, they are born. Okay, of course. Okay, let me show you some of them. Okay, so if you type in the word 10x, you will see a lot of people commenting on stock market. This is a 10x stock, that is a 50x stock, that is a 20x stock. Okay, if you have been looking at some of such threads or news or videos, Can you show me a thumbs up? Okay, just show me a thumbs up so that I know there are many of these videos. Okay. Okay, what's the support price of Tesla? Okay, I would say there will be a very strong support somewhere around $500 to $600. Okay, for Tesla. Okay, but the resistance is definitely around $800. Okay, so play within this range. Okay, thank you for your thumbs up. Okay, so can you see this video? This video garnered almost 150k views. 150k views. Okay, and tell you what. Okay, definitely this guy is having more views than me. Okay, I just recently launched my so-called Daniel Low investment YouTube video. Okay, so I want to be also the next 10x guru. Okay, just a joke. Okay, I won't be promising you this will be a 10x stock, because this year is time to face reality. This year is time to face reality. And think about it. Some of you are already a veteran. You have been in the stock market for almost 20 years. Okay, you have been in the stock market for 20 years, and you're listening to a 20 plus, you're listening to a 20 plus year old YouTuber that tell you this is a 10x stock. Okay, this stock has a potential chance because he's buying with $1 million. Okay, of course, I'm not commenting whether is it true or right. Okay, but think about it. This guy hasn't gone through any crisis yet. Definitely, he hasn't gone through the subprime bubble burst. He did not even face a stock that has decreased by 90%, okay, in just a few months, right? Okay, that was what happened to bank stocks in 2008. Okay? And this guy is trying to sell you a stock that can increase 10 times. And he's saying that this guy is a multi-millionaire. Okay, or he invests, okay, 3 stocks for 1000% gain. Can you imagine 3 stocks for 1000% gain? Okay, I don't know who is this guy, but it keep on appearing in my YouTube. Okay, someone called Chamat. Okay, thinks this stock from $8 will go up to 10 times. Okay, 10x. Okay, $80. This guy has a 300,000 view. Wow, this guy is called Meet Kevin. Okay, yeah, he looks old enough. He has a beard, by the way. Okay, he just bought 200,000 worth of shares, and this is your next 10x stock. Okay, but of course, this is not Jeff Bezos. This is someone telling you that Jeff Bezos think that this is a 10x stock. Can you imagine? Okay, this YouTuber tell you that Jeff Bezos think that this is a 10x stock. This guy must be Jeff Bezos' relative, right? Okay, this guy must be someone that's very close to Jeff Bezos. Okay, who is, by the way, okay, one of the so-called most wealthy guy on earth today, right? Okay, and let me tell you, Jeff Bezos will never tell you this is a 10x stock. Okay, I don't believe any multi-billionaire today will tell you this is a 10x stock. Okay, maybe except Elon Musk. Okay, but definitely not him. Okay, so someone is telling you, selling you a story, selling you a video, okay, that says that Jeff Bezos said so. Think about it. Is this true or not? Okay, okay, and of course, and let me tell you somebody called Cathy Wood. Okay, yes, Cathy Wood. I think she's a very reputable hedge fund manager. And definitely she actually came out with a lot of funds, and all these funds has increased quite a lot in the last year. Okay, in the span of 1 year. Okay, but somebody is trying to tell you that Cathy Wood says this is a 50x stock. That means this stock has a chance of increasing 50 times. This is utter rubbish, I think. Okay, this is totally not true. Okay, this don't know who, the star. Okay, this basically this YouTuber is called the star. I don't know who is he. Okay, is trying to tell you that Cathy Wood says this is a 50x stocks. I have been looking at some Cathy Wood videos. Cathy Wood is someone I think that is very humble, very down to earth. She couldn't possibly tell somebody that this is a 50x stock. So what I want to tell you is we need to be diligent, or we need to be intelligent enough to differentiate ourselves. Okay, the hype, the excitement that's created by the media, by the social media gurus, by the social media YouTubers, by the social media Reddit users, by the social media don't know what, okay? There are different ways, Twitter users, okay? You need to differentiate them and the real analysts and the real stock investors that has gone through crisis, okay? So there are so much so-called YouTubers that was born last year. Yes, some of them got it right. Just like me, I got it right. I got my Tesla right. Some of them got NIO right. Some of them got the digital currency right. But this year, it's time to face reality because we are in the second year of bull market cycle. So today, my job is to bring you down to earth, okay? So don't believe, okay? I do understand some of you do follow Cathy Wood recommendations, okay? You can actually subscribe to her website or whatever, okay? But she won't tell you this is a 10x stock, okay? That it might be a growth stock. Yes, I agree, okay? Because she like to buy those innovative growth stock that has a monopoly or that has a service or a product that may be selling that may be sold to the whole world, okay? This stock has a potential chance of increasing a lot, but she wouldn't recommend you and tell you this is a 10x, okay? So this year, what happened, okay? So get yourself mentally prepared. The second year of a bull market, please take note, is always, okay, the worst year of a bull market cycle, okay? The second year of a bull market is always the worst year of a bull market cycle, okay? Can you write down the word worst, okay? Please remember this word, okay? A bull market can last for 5 to 10 years on average. The shortest I've seen over the last 60, 70 years is 5 years of bull market run. The longest I've seen is the last 12 years of bull market run, okay? From 2008 subprime bubble to 2021, 2021, okay, the COVID crash. It is almost a 12 years bull market cycle. That is the longest I've seen. But the worst year to buy shares in a bull market cycle is always the second year. Okay, please write down, okay? It's always the second year. Why? Number one, the stock has already run so much. Some of your shares has already gone up multiple times. Yes, some go up 10 times. Some goes up almost double its value, okay? But the reality is, economy has not catch up with the bull market run yet. Okay, economy is still very, very poor today. You are still talking about a high unemployment rate. You're still talking about a fourth stage of COVID, okay, fourth wave of COVID. You're still talking about a country called India that is having a death rate, okay, like no, not like nobody, okay. So the economy is definitely playing what we call a catch up. The economy will not recover that fast yet. I do understand there may be vaccine coming out, but this year you are definitely not talking about a fast growth recovery in the economy. No, okay? So what happened is the economy need, okay? The stock need, okay? We need this economy to bring, okay, this year, okay? What happened is, okay, maybe I get my words wrong, okay? We need to wait for the economy to be up. Okay, need the economy to recover. Okay, sorry that I just prepared this PowerPoint a few hours ago. Okay, so there are some words that are not right. Okay, so we need to wait for the economy to recover so that the stock market and the economy can go hand in hand. Okay, like what I said, stock market and economy, they are almost like twin brothers. When the economy is down, the stock market generally should be down. When the economy is in good shape, the stock market should be also in good shape. It should be reflected in the earnings. It should be reflected in the balance sheet. Okay, but last year was totally different because of the printed money. I call it the fake economic cycle. Because of the printed money that was injected into the market, the stock market ran first. Okay, it ran so high that now there is a gap between the economy and the stock market. So why is it second year is always the worst year of a bull market cycle? Because the stock market needs to wait for the economy to recover so that they go hand in hand again. And that's the reason why second year normally there needs to be a break. There needs to be a rest. And this rest can normally be as short as 9 months to as long as 2 years. Can you please write down? Okay? It can be as short as 9 months to as long as 2 years. That means the stock market will be in a sideways market for 9 months to 2 years while waiting for the economy to recover. Think about it. If you think that this year economy does recover, why doesn't our interest rate rise immediately now? A few months back, people has been talking about interest rate rising soon. But Federal Reserve, who is the body that actually dictate the rise of interest rate, right? Federal Reserve Chairman Jerome Powell says we won't rise interest rate until 2023. Why? Because this year is still in bad shape. If you rise too early, will bring another crash. So we cannot rise so fast yet. We need to wait for India. We need to wait for China. We need to wait for those third world countries. Okay, we rise too fast, they will crash. The economy will crash because they don't have vaccine yet. Okay, so there needs to be a rest, and sometimes it can be as short as 9 months to as long as 2 years. That means your Tesla will not run for 1-2 years. That means your NIO will not run for 1-2 years, even though it's a good stock. We need to wait for the economy to recover. We need to wait for the sales to recover. We need to know Tesla really sell a very good car and they generate a very good sales in the economy. Okay, so my thing for you is you need to learn how to profit take. This year is about buying at low, selling at high. Learn how to profit take and sell your stock once it reach the high point. Once it reach the high point, okay? The stock market need to wait for the economy to be put up, okay, before it runs again, okay? Then your next question would be, Daniel, how do you know where is the highest point in this second year? By the way, so far, if you kind of get what I mean and you think that our video is quite a good video, okay, and if you think your friends and relatives, okay, might gain some insight and might benefit from this video, please help us share it with your loved ones, okay? Just click on the word share, okay, either in YouTube or Facebook Live, okay? Share with your loved ones. Try to help us to share with as many people as possible, okay? Because I think there are a lot of information here today, okay? How do you know the highest point in this second year of bull market? When does it reach the highest point? When is the right time to sell? If you really want to know the answer, can you give me a one sign? Okay, can you give me a one sign? The more ones there are, the more willingly I will share with you. I will give you ample evidence what has happened over the last 30 years. Okay, so give me a one sign. Just give me a one sign. Okay, I'm going to share with you more. Okay, May 10 will crash. Okay, mark my words. Okay, of course, today we are not trying to be prophet. Okay, we are not predicting when the crash will be, but I'm going to share with you where there might be a very strong resistance. Okay, so once you reach that area, it's time to be vigilant. It's time to it's profit taking time. Okay, so time to sell part of your shares, part of portfolio. Okay, thank you SH Lee, thank you. Okay, thank you Siu Yi Tan in YouTube. Okay, thank you Adrian Lim, thank you Steven, thank you Simon Ho, thank you. Okay, now can you please write down, this is what I call the double up rule. Can you please write down these words? Okay, double up rule. In the second year of bull market, normally when your index price, when I say index, I do mean stock index, okay? When your stock index went up 2 times its value, there is always a resistance area. And there is a likelihood chance in the next few months, there's bound to be a big correction, okay? So this is what we call the double up point, okay? Let me show you a chart, okay? This is a chart that shows you the stock market of Japan. So the chart I'm looking at is Nikkei 225. Nikkei 225, okay? So I just want to show you what happened in 2012. If some of you know, 2012 was the year President Abe want to go for a re-election. So the president of Japan today is not President Abe, but he was the ex-president in 2012. Okay, so at the time he want to go for a re-election, but during the re-election, a lot of people don't vote for him. Okay, he heard a lot of voices because the economy is in bad shape and the stock market has been dropping in a bear market and it hasn't recovered. Okay, so what President Abe did is, in 2012 June, he announced a stimulus package, and today is labeled as Abenomics. Okay, you can go to this Wikipedia and search for Abenomics. Okay, Abenomics means, number one, he's going to print a lot of money and inject into the stock market by buying its ETF. Okay, that means he go and buy shares. Okay, using the so-called the tax that he get from Japan. Okay, from the Japanese. Okay, uh, population, and he want to go and buy shares. Okay, number two, he want to drop interest rate. So at the time in 2012, interest rate was at 0%. Okay, so what did he do when interest rate is so low at 0%? He think of a way by dropping interest rate to negative interest rate, and that's the reason why today Japan has what we call a negative interest rate environment. Okay, so it dropped below 0% to stimulate the economy, stimulate the stock market. Okay, and number three, he lowered down Japanese yen. So this is what we call Abenomics. Okay, and it got so effective that the stock market reacted to the Abenomics policy. Okay, which means stimulus measures. Okay, basically. So in 2012 June, it started its bull market run and it lasted 1 year. Okay, 1 year. Okay, so it lasted until 2013 June. Okay, it reached an all-time high figure of 16,000 points. Okay, I still remember that day I was being interviewed by 95.8 FM. Okay, so let me show you that interview. Okay, if you do a Google search, okay, and type in the word Nikkei, Deadly Cliff Daniel Low. Okay, so in the past I do write blogs. Okay, nowadays I'm too lazy to write blogs. Okay, so what happened is that day I was being interviewed by 95.8 FM, and after this interview I actually put my comments in my blog called daniellow.com. Okay, that day I published and I said Nikkei today it break 15,000 point, but 16,000 is a deadly cliff! Exclamation mark. Okay, and I even go to this what we call Yahoo Finance. Okay, this was the chart in Yahoo Finance that day. Okay, uh, sorry, I can't magnify it, but I just want to share with you. That day I went to Yahoo Finance and I download that chart. It was mentioned that that day it was at 15,138 point, and that day it went up 100 point. Everybody at that time was so crazy about Japan. Okay, because it has almost like went up a lot. It doubled up its value from 8,000, the lowest point. Okay, 8,000. Okay, and that day I said you need to be careful at 16,000. Why? Why? Because that is the double up resistance value. Okay, so it came out in my blog. I was 900 point off it, right? At the time, it's at 15,100. Let us today go back to that day. I just want to show you the chart of Nikkei. Okay, so let me go to the 10 years chart of Nikkei. 15 years perhaps. Okay, okay, this was a chart. So President Abe has what we call Abenomics stimulus measures, and it started its move from 8,000, almost 8,000 point, the lowest point. So if you double up, that figure is 16,000 point. Okay, so that very day I still remember. Okay, that very day. Okay, let's zoom in on this spot. 1 year later, exactly almost 1 year later, when I was interviewed, it was at around 15,100, which is like 1 month before the big correction. Okay, so almost the mid of May, I said it won't go above 16,000. The moment it reached 16,000, there will be a big fall. And true enough, that day, what happened? This was that day it hit 16,000 point on the 22nd of May. Okay, so you can see the highest point it reached is 16,020, right? 16,020 points. The moment it hit 16,000 point, that very day, okay, this index starts its drop of 1,000. Can you see? Around 1,000. From 16,000, it dropped to 15,000. There was like a 1-day crash. Then following which, the whole month it dropped. By June, it reached around 12,000 point. 12,200 to 300 point, the lowest. From a high price of 16,000, it dropped 20%. 20% drop in the index. At the time, a lot of stocks crashed. Some stocks dropped 30, some stocks dropped 40%. Okay, because generally speaking, stocks is more volatile than the index, right? It will drop more. Okay, it will drop more. It's almost like in March and February, when Nasdaq dropped 12%, Tesla dropped almost 40%. A lot of stocks drop more than the index because stocks is generally more volatile. Okay, I was right about that point. I was right. That very day, the moment it reached 16,000 point, it almost is like a mini crash. It's not a bear market crash, but there's a big correction. Okay, why? Because of double up resistance. And true enough, every time for the next 2 years, okay, after that drop in 2013, every time it reaches 16,000, there is a drop. Every time it reaches 16,000, there is a correction. There seems to be a very strange resistance point, okay, resistance area. That's what I call the double up rule. The double up rule, okay. Okay, later I will share with you more evidence. Okay, I will share with you. Okay, now the market has opened. Okay, by the way, let me share with you this. Although I said there might be some correction coming up soon, okay, later I will share with you more, okay, but this is what I want you to do. Okay, if some of you want to know about what are the stocks to look at this year upon a correction, okay, so make sure you are patient enough to wait for a correction to come. If you want to know what are the stocks to look at, last year I did recommend some of you to buy like stocks like Boeing, Tesla. Yes, it has increased quite a lot, okay, but this year I want you to diversify. I want you to buy some infrastructure stocks. Okay, why is it so? Because Joe Biden plans to print $2.3 trillion, and in the next few years is going to dump into some infrastructure projects. Okay, so that's definitely one sector that has been always lagging behind. Definitely the high growth sectors like technology or even the biotech. Okay, so it's time to buy all these stocks upon any correction. Okay, so if you want to get this free digital report, I've spent a lot of time in the last few weeks to study infrastructure stocks. Yes, some infrastructure stock has run, but I do feel some will run quite a bit this year. Okay. So if you want to know what are the stocks I'm looking at, if you want this digital report, okay, please do me a favor. All you need to do is do a few things. Okay, so I spent a lot of time to do up this digital report. I'm going to give you free. Okay, what are the 3 infrastructure stocks that will benefit from this 2.3 trillion stimulus? Okay, so if you like this report, and I'm going to give you free, okay, but of course I do have a limit, okay, in sending out these reports. Okay, all you need to do, if you want this report free, please like our page in Facebook, okay, or YouTube. Okay, our Facebook and YouTube page is called Daniel Low Investment Group. Okay, Daniel Low Investment Group. Okay, so you can go to, if you are in Facebook, you like our page Daniel Low Investment Group. Okay, search for us, like it, and share this video inside the page, as a public post. Okay, just share this video as a public post to your friends. Okay, tag as many friends as possible, and after which in this video you just comment shared. Okay, SHARED. Okay, these are the 4 simple steps. Okay, do me a favor, hope you share this to your loved ones, share with as many people as possible. In the next few days we are going to give you this report. Okay, we are going to send you this report. Just click on share, okay, with as many friends as possible, and in this video you just put in the word shared, okay, so that we know you already shared and we can give you this. Okay, so make sure you share it with your loved ones as a public post. Okay, this video itself. Okay, share with your loved ones as a public post. Okay, tag as many friends as possible. Okay, thank you. Okay, all you need to do is share. Okay, like our page in Daniel Low Investment. If you're looking at YouTube, it'll be Daniel Low Investment. Okay, Daniel Low Investment in YouTube. Thank you so much. Okay, now what about 20 years ago? Okay, 20 years ago. Let us take a look at one leading index in US. It's called Nasdaq Composite, right? If some of you remember, there was a bubble burst. We call it an internet bubble burst in 2001, right? 2001. Okay, internet bubble burst. A lot of tech stocks dropped. It bring down the whole market. Okay, there was like an internet bubble burst. Okay, then in 2002, the market goes into a bull market cycle. For almost 1 year, from October 2002, it lasts until 2004, okay, January. So the lowest price it reached, okay, that day, the lowest price it reached for this Nasdaq is 1,100 point. Okay, you can see almost 1,100 point. So if you double up this figure, can you tell me what is the number of points you get? Okay, 2002, right? So what happened the moment it reached 2002? The moment it reached around 2002, there is a drop of around 20%. 2002, it dropped to as low as near to 1,750 points. It's almost a drop of around 400 points, right? A 400 point out of this 2002 index is a return, a drop of around 20% return. If the index can drop 20%, your stock can drop easily, 30 to 40% easily, okay? There was a bit of a big correction in the second year of this bull market, okay? What happened? The next moment, okay, it reached 2002 again, expect another drop, another correction, and this lasted for around 1.5 years. This sideways market lasted for 1.5 years. That was 2004. What about the next bear market crash, right? In 2009, we call it the subprime bubble burst, right? In 2009, March, Nasdaq Composite reached a bottom of around 1,260 points. 1,260, that was the bottom. And that was the day US decided to implement the stimulus package, just like last year, right? And they call it QE, quantitative easing. And it was so effective that all the stocks keep on running up and the index went. So if you take 1,300 points, multiply by 2, you get what figure? Please write down this figure. Okay, 1,300 multiplied by 2, you get a figure of 2006. The moment it hits 2006, what happened? It started to correct around 20%. It reached around 2,100 points. 2006 to 2001 is a collapse of 500 points. 500 points is easily a 20% drop. Your stock can drop 30, 40, right? Then it reached 2006 again, and there was another correction. And this trend lasted for around 1 year period, okay? So where are we today? Let me share with you, where are we today? Nasdaq today, by the way, if you know Nasdaq, last year, it reached a bottom after COVID. It reached a bottom of 7,000 points, right? And today, if you double it up by two times, it will be 14,000 points. And some of you are wondering, why is it my Tesla has not recovered yet? Why is it from $900 it dropped to almost 500 plus? Why is it my NEO haven't recovered yet? Why is it so many stocks that I think is good? All the so-called high-tech growth stocks, all the so-called the Cathy Wood aggressive so-called high-tech growth is supposed to run 10 times, okay? But it did not, because your index is pushing it down, because there is an ultimate resistance there. 7,000 times 2 is 14,000. In January, February, it already hit 14,000. That is why the index itself dropped 10%. Okay? And I do feel we are not out of this area yet. It will last for around 1 year period. This year, the ultimate resistance for Nasdaq is still at 14,000 points. Yes, I said in March on the 8th, I said buy into Nasdaq, but that is a short-term gain. The moment it hits 14,000, sell your tech stocks. Okay, there is a danger in the next few months, it might come back down again, right? We are already there. And do you know what? The most amazing thing is, over the last few months, people have been telling me this, okay, or market analysts, they have been telling me this. Daniel, not Daniel, okay, or some so-called gurus, okay, have been saying this. The real reason why tech stock drop is because of the treasury yield. It's because treasury yield has gone up so much to today somewhere around 1.7%. The 10-year yield has gone up to 1.7%. And that's the reason why the tech stock drop. And let me tell you, if you have been studying treasury yield, the 10-year bond yield, over the last 30 years, the average 10-year bond yield, that means you buy treasury bond, the dividend every year you get from the government, okay, the interest that you get, the yield you get, on average is 2 to 3%. That means today we are not even near 2 to 3% yet. That's the average. That's the normal bond yield rate. That's supposed to be the norm, okay? But people are telling me that 1.7% is already too high, okay? That's the reason why the tech stock dropped. Why is it people are finding this reason? I would say it's because they don't know the reason that there is an ultimate resistance at 14,000 points. They try to find some excuses that retailers don't understand, right? Okay, what is yield rate? Okay, why increasing yield rate will cause the tech stock to drop? If increasing yield rate will cause the tech stock to drop, it should drop over the last 10 years. Tech sector should not be the best performing sector because on average it's around 2 to 3%. Okay, so that is just an excuse in January or February. Analyst is trying to give you to explain the tech stock drop. Okay, to explain to you the absurd phenomenon why tech stock drop but yet the other sectors rise. Okay, why is it the lagging sector is rising? Okay, it's because of Nasdaq. But what about Dow Jones today? Okay, Dow Jones, let me share with you, this year we are near there. We are near the ultimate resistance. Okay, Dow Jones, the lowest price it reached is 18,000 points. Okay, 18,000 points, if you multiply by 2, is 36,000. We are just almost 2,000 off 36,000. Okay, so easily in the next few months you are going to hit this figure soon. Okay, so Dow Jones at 36,000. It's not that the other sectors don't want to drop. It's more resilient and then growth stocks today than the tech stocks today. No, it's because generally the index has not hit its ultimate resistance. That's why your so-called your industrial stocks, okay, your airline stocks, okay, is more resilient. Okay, it's because it hasn't hit its ultimate resistance. Okay, S&P 500 index today is at 4,160 points. So if you take the lowest price of 2001, 2,150, 2,160, if you multiply by 2, okay, of course for me sometimes I will do a round down. Okay, I will do a round down. You cannot exactly say, you cannot exactly wait for the day Dow Jones increase to 36,000 before you sell your shares, right? So sometimes you do a round down so that you have a better feel. Okay, where is the resistance? Perhaps at 35,000 you need to do some profit taking. Don't wait for the last day before you sell a share, okay? So if you round down 2,163, if you round down, it will be 2001. If you round up, it will be 2002, right? So if you round down to 2001, you multiply by 2, it will be 4002. So anything, S&P 500 in the next few months, anything above 4002 is a danger area to be in. It's time for you to do some profit taking, okay? But sometimes if you round to a so-called a $50 figure, you'll be 2,150, you'll be multiplied by 2, you'll be 4,003, okay? So somewhere around 4,003 to 4,004 is what I call the resistance zone in the next 6 months. I don't really know when is the day the market will crash. But let me tell you, the next 6 months, it ain't good. Okay, the signs are there. Okay, there's some overhype in the stock market. There need to be a pullback for the economy to catch up with this stock market run over the last 1 year. Yes, some of you have been making good money. So please do some profit taking. Please do some profit taking. It may be 1 month later, it may be 2 months, it may be 6 months later. Okay, but it's definitely not good. Okay. Okay, so the moment S&P 500 increase above 4,002, just be careful. Okay, just be careful. Okay. So what do you do as an investor? Now, okay, I want you to do this. Okay, get ready for a significant correction in the next 6 months, and this correction will be quite big. Okay, that you won't expect. People don't expect that NIO drop half price in a span of 1 month. People don't expect Tesla, such good growth counter or growth stocks or electric vehicle stock, to drop almost 40% in the span of 1 month. Okay, people don't expect a good mature company like Apple to drop 30% in the span of 1 month, but it did. Okay, because the index dropped 10%. What if the index dropped 20%? What if Nasdaq in the next 6 months dropped 20%? Where will the price of Tesla be? Okay, my point to you is, it will be really disastrous, right? Okay, if a 10% drop in Nasdaq can cause Tesla to drop 40%, can you imagine double that figure? Can you imagine a Nasdaq 20% crash? Okay, it'll be utterly disastrous. Okay, so get ready for a significant correction in the next 6 months. Okay, if some of you are my student, you have gone through my so-called stock mastery program, you will learn what is bullish index, right? Take a look at the bullish index. Take a close look at the bullish index. The moment the whole market tells you there is a turnaround, when that 3-0 comes, try to sell away everything. Wait for the crash to come. Wait for the correction to come. Okay. Okay. I don't mean a bear market crash. I don't mean a correction. It can be of the magnitude of 15 to 20%. Okay. The index can drop 15 to 20%. Okay, get ready for this. Okay, but of course, you can also similarly use bullish the index indicator to help you to know the bottom. Okay, if some of you want to know when that day will be, pay attention to our Daniel Low investment page. Okay, so whereby constantly we feed you with info to know the bottom and the top. Okay, so you have been following our page and you really like us, and if you think that our recommendation has been quite accurate, can you give me a love sign? Okay, so that next time, okay, if I feel that, okay, the stock market is too high, I will notify you if there's a turnaround at the top. Okay, and if the stock market has dropped to a bottom, I will share with you when that day will be. Okay, so I do have a so-called indicator to know that turnaround of the entire market. Okay, so just give me a love sign so that so that next time I can share with you, and hopefully, okay, the more love there are, the more willingly I will share with you that. Okay, thank you so much. Okay, number 2, okay, what should you do as an investor over the next 1 year? Okay, the market will be sideways. You need to be mentally prepared. Don't believe those that tells you this is a 10x stock anymore. Don't believe those, okay, YouTuber gurus that tell you, okay, this stock is a magnificent stock. Okay, it's the next Tesla. Okay, there's no more Tesla. There's no more 10x anymore. Okay, it will be a sideways market, and this duration will be quite long. It can be as short as, I've seen the shortest second year sideways correction The shortest I've seen is 9 months, up to a period as long as 2 years. 2 years, okay? Mark my words, the stock market will be up and down in a cycle, okay? So you need to know when is the right time to buy at the low point and when is the right time to sell at the top, okay? And if some of you, okay, want to know what investing strategy I will use in the next 1 year, especially in the second year of this bull market cycle, okay? I do recommend you to know a bit about options trading. Why? Because there are some options method that is rather short term, okay? If you know how to actually sell options, be an option seller, you try to gain from the time value depreciation in that particular 1 month to 2 months period, okay? So if you know about options, continue to use your options method, okay, to gain short-term gains, okay? Don't try to buy shares and go long-term anymore. Like what I said, there won't be Tesla anymore this year, okay? Tesla will be in a range, NIO will be in a range, Baidu will be in the range, Alibaba will be in the range, Apple will be in the range, okay? You need to know how to buy and sell. And that means go for short to mid-term gains, okay? Short to mid-term trading works, okay? So if you know options method, good, okay? Go for short-term option strategies. Don't go and buy option and hold long-term anymore, okay? Long-term don't work this year, okay? If some of you have been buying outright, okay, call option over the last 1 year, you have been making tremendous sum of money. If you buy a call option on Tesla, you make many times your return, right? This year is really different, okay? Your premium will cause your options premium to depreciate a lot, okay? So don't go for long-term strategies anymore, short-term strategies, okay? Now, next thing I want to urge you is try to buy some defensive assets, okay? I call it the defensive safe assets, okay? The more volatile the market is, the more volatile your stock market is, the more this kind of safe assets will run. And that I mean gold and bonds, okay? Gold and bonds. If some of you have been studying gold, gold has really bottomed at somewhere around $1,700. It has depreciated a lot, okay? For gold price, okay, it has depreciated from 2001 to as low as $1,700 a few days back or a few weeks back, okay? I would say 1,700 to 1,800 region, okay, will be a good accumulation zone for gold, okay? So this will be, this year I would say, okay, this year I would say there is a general, what we call bottom or support area, okay, for this index, okay? So if you are buying gold at somewhere around 1,700 to 1,800 range, I would say that will be a good pickup point, okay? Try to buy into gold amid the volatility. There will be a lot of volatile, the market will be really, really volatile, okay, coming out in the next few months, okay? So try to buy some safe haven assets to hedge, okay? And that I also mean bonds, all kinds of bonds. You can look at all kinds of bonds. You can even look at those third graded bonds or what we call the junk bonds, okay? The corporate bonds, your government bonds or whatever bonds, there's a good chance it will recover, okay? Now, the next thing I urge you to do is upon any correction, okay? Upon any correction, you must be patient to wait for a correction, like what I said, okay? We are near to the double up zone, okay? Buy oversold stocks that will benefit from stimulus packages. And if some of you know, Joe Biden already issued a stimulus package recently, the $2.3 trillion infrastructure stimulus, right? So buy into some infrastructure stocks to hedge against your so-called good growth stock, right? So infrastructure, I would say, will benefit a lot, and you will be the number one beneficiary out of all these $2.3 trillion stimulus, okay? They will build a lot of roads, airports, ports, railways, energy companies, utilities will pop up, okay? So buy into all these stocks that will benefit from this $2 trillion package, okay? So look at your infrastructure stocks, okay? So if, by the way, just now I already said, if you share this video today with your loved ones, okay, share this video today, like and share our Daniel Low investment group, and go to this investment group and share this video out as a public post. Tag as many friends as possible, comment, share in the video, okay? In the video you are looking at, I'm going to give you these three top three infrastructure stocks that will benefit the most upon any correction this year, okay? Okay, good. Okay, now, next thing is, okay, so I almost round up what I want to present today. The most important info is to get you mentally prepared for the next 6 months. I do feel the market is very saturated. Anytime there might be some correction coming up, okay? People ask me, is it sell in May and go away? It might happen. It might happen, okay? My prediction is somewhere around either May or June, okay? It may be June, okay? It may be June, okay? There is going to be a big so-called correction boiling, okay? So somewhere around perhaps May or June period, okay? So if you want to know more about understanding the whole market scenario, about understanding stock market, okay? This is what I'm going to do for you. I'm going to have this free stock investment physical masterclass coming up, okay? But as you all know, we are still in social distancing. I need to adhere to some social distancing measures, okay? So I'm going to hold a free class for you to mentor you about stock market, to let you know the general trend about stock market, and to know what are the asset classes to buy this year, and how do you predict the bottom this year, okay? So there will be, however, only 40 packs, okay? If some of you know, our distancing measure says that in a classroom style, there are only like 50 seats, okay? So there will be social distancing, 1 meter apart, okay? But this is a physical class whereby I will try to educate you. I will share with you my years of experience in the stock market, okay? So these are some of the things that in this class I'm going to share with you. How do you spot the bottom of any stock or index in a correction? Like what I said, there's bound to be some correction coming up. But amid the correction, how do you know that is specifically that bottom? So in this physical stock class, I'm going to share with you how to identify the bottom of any stock or index in a market correction as severe as a 20% drop, okay? There is a technique, a very easy way to do it, okay? I'm going to share with you in this class. Number two, know what to buy this year in the second year of bull market. Just now, I quote a few asset classes, okay? Of course, I urge you to diversify a bit to buy gold and bond. But specifically, what are the kinds of assets? Can you buy REITs? Okay, so in this class, I'm going to discuss with you some of the asset classes you can go into, okay, to accumulate this year while the market is sideways, okay? Number three, how do you build your retirement portfolio? Okay, this year, like what I said, it will be the worst year of this bull market, but continuously, you can always build your retirement portfolio by accumulating some good shares. What are those good shares? I'm going to share with you in this class. Okay, and number four, I'm going to share with you some behavior and characteristics or traits of a successful investor. Okay, so if you want, I would say being a good investor, not only should you have some good strategies, you must know your game. Not only that, you must know yourself. You must know your characteristic. Okay, there are some characteristics that will enhance your chance to be a successful good investors. Okay, so and patience is definitely one of them. So in this class, I'm going to break down into what are those characteristics, what are those behaviors. Okay, number five, how do you execute a short-term monthly trades in the second year of bull market? While the second year is a sideways market, how do you gain a monthly income in the stock market? Okay, so I'm going to share with you a particular strategy I like, and you can apply it. Okay, so make sure in this class, of course, hopefully you can bring your so-called uh, handphone, okay, or some gadgets. Okay, so I'm going to share with you how to do it, okay, specifically in the class, so it'll be quite physical. Okay, and all you need to do, okay, so 40 seats today. I guess today there are a lot of you here, okay? I don't know whether there's enough seats for you, but of course, if you are being rejected, I have to say sorry to you, okay? Because we are still in social distancing measures. I can't release to too many people, okay? So all you need to do is claim your free seats now. If you want the English class, click on www.dl-investment.com/en. Okay, so I think our assistant will drop the link to you, okay, in Facebook and YouTube. Okay, just go there and click. Okay, Chinese class, it will be /cn. Okay, /cn. Okay, okay, each class is only 40 packs. Okay, okay, good. Okay, perhaps what I do is if you have any questions now, I still got a few minutes left to try to answer some of your questions. Okay, uh, the last Facebook live session that I held It's actually last year March, last year April, if I don't remember wrongly. Okay, last year April, whereby I announced that, okay, it's time to buy shares. I got it almost right. Okay, 23rd of March was the bottom. Okay, I did ask you to buy 24th of March, and there were many live videos that I issued last year to tell you that's the bottom. Okay, so it has been almost 1 year. Sorry for the delay. Okay, so if you have some questions, do ask. I will try my very best to answer your questions. Okay. This is not an online class, by the way. This is a physical class whereby I will handhold you. I will share with you what are some of the strategies, some of the methods. Okay. So it's not online. Okay. This is physical. Any class for Malaysian students now? Sorry, no Malaysians. I'm not able to fly yet. Okay, because of social distancing. But in future, if there's a chance, in the past I do visit other countries too, like Vietnam, Malaysia, Thailand. Okay, so if there's a chance, once COVID is over, I can fly to your place. I might be able to launch a physical masterclass free. Okay, so currently not yet. Okay, so this class is only for people who live in Singapore. Okay, at this current moment. Okay. Okay, good. Let me check what are some of your questions. Okay, why is the hot money not flowing into the stock market as expected? Okay, yeah, very good question. Capricorn asked a very good question. Why is it that this $2.3 trillion package that Joe Biden actually promised has not really caused the stock market to go as crazy as last year, right? Last year when Donald Trump announced the $2 trillion, the stock market immediately react to it. But why is it this year it's so slow? The stock market is rising, but it's not rising as fast as expected. Why? This is what I call the crying wolf. This is crying wolf. Okay, stimulus package always work in the first year of bull market, but stimulus package is always useless in the second year of bull market. The more Joe Biden announced the stimulus package, the more the analysts will be worried about it, because it does mean that, hello, Joe Biden, you have printed around $10 trillion. Why isn't it effective? Okay, why isn't it reflected in McDonald's earnings? Why isn't Tesla selling its cars so well? Okay, when the stock has increased 10 times, people will question the stimulus package. So people will, because it's already factored in. The rise in price in the stock already factored in the first year. Okay, it's almost like the first $2 trillion that Federal Reserve print, you get excited about it. The second $2 trillion that Federal Reserve print, you get a bit of excitement. But the third time Federal Reserve printed that 2 trillion, you feel nothing. You're immune to this printing of money. The Wall Street is already immune to the $2 trillion. Okay, so that is always reflected in the second year of bull market. People are immune to the printing of money. Okay, so that's the reason why it can be a bit slow. People are slow to react, and some people, some analysts even question, why is it after printing that $10 trillion, our unemployment rate is still so high? Why hasn't it recovered faster than expectations? Okay, so people will question about the stimulus, and that's generally what caused the stock market to be slow in the second year. Okay. Okay, Simon Ho says, this ExxonMobil, whether we can hold this share. Okay. Okay, Simon. Okay. Yeah, this is a very good question. Okay, although I said there might be some correction in the next few months, is there a need to sell away all my shares if I'm a long-term investor? Okay. So that really depends on your investing style and habit. Are you really a long-term investor, or are you a short-term speculator? Okay, there's nothing wrong being a short-term speculator. I do speculate on shares. Okay, I make my 20%, sometimes I will run, right? There's nothing wrong, because this year is all about short-term, right? Like what I said, this year is about short-term. This year is not about trying to find your 10x stock anymore. It won't happen. It won't happen in a sideways market. When your index go up 20%, it comes down 20%, goes up 20%, comes down. How can a stock go up 10 times? That will be a very, very unusual stock, right? Okay, so If you're a long-term investor, you need to ask yourself, at what price did you buy your stock at? If you manage to buy your Tesla at $60, I will say you can be a long-term investor, no problem. Okay? Tesla from $900, it fall back to $500, you can still hold because you are still earning profits, right? But if you buy your Tesla at the end of 1 year at a high price of 800, you can't be a long-term investor. You got to be a short-term trade. It got to be a short-term trade. You got to be a short-term trader. Okay? You got to put your stop loss. You got to put your profit target, right? Being a short-term investor means you need to be disciplined in your trade. You need to adhere to some money management practice. I don't know about you, but I do think being a short-term trader, profit target and stop loss is a must. It's a must. Okay? Establish a good profit target and stop loss. Okay, just in case the market really collapse. Okay, so if your index drop 15 to 20%, your stock can easily drop 30 to 40%. Okay, can you withstand this correction? Ask yourself, if you buy Tesla at 900, can you withstand a $400 drop? If you can withstand a $400 drop and you still have additional funds to add in to average down your position, by all means be a long-term investor. You don't have to sell away your shares. You can be Warren Buffett, right? You can drag through this second year of bull market because there will be a third year and a fourth year and a fifth year, okay? But you need to wait. You need to wait for this second year to be over. You need to wait for the economy to catch up, okay? So I leave it to you to establish yourself. Are you a short-term speculator or are you a long-term investor, okay? Okay, why is China market not moving up even after ease of antitrust rules? Okay, okay. China's stock market has been quite good last year because of, I would say, tech sector. So like Tencent, all these companies, JD.com, they are considered tech stocks. It has been doing very well. It has been doing very well. And that's what caused China index to go up, Hong Kong index to go up, even Taiwan index to go up. Okay, if some of you know, this is the Taiwan index, right? Taiwan is a country whereby they have a lot of tech stocks. Okay, if some of you know, they have a lot of tech stocks. They have a lot of SME tech stocks. Okay, Foxconn and all these companies, right? So it's highly tech weighted index. Okay, so that's the reason why it has doubled up its figure from 8,000 to almost 17,000 today. It has already gone up, double its figure. Okay, 8,005 to 17,000. It's exactly double the number. It's exactly double the number. Okay, so at 17,000, I don't expect Taiwan to go further up. There will be bound to have some double up resistance in this area. Okay, from now onwards. Okay, so some China shares does run, but like what I said, the whole environment of tech sector has already reached the boiling point of, okay, Nasdaq has already reached a double figure. Taiwan has already reached a double figure. If you look at some composite, okay, tech sector ETF has already reached the double figure, okay. So there has to be bound to have some resistance area, okay, for Nasdaq at around 14,000 today, okay. So that is the reason why uh, China shares, even with the antitrust issue easing, even with the penalty of this what we call Alibaba stock, okay, easing, even with Jack Ma lowering down his position and he may even relinquish his CEO position in Ant Finance, okay, uh, it will still be a sideways market. This year is all about a sideways trend. Okay, so you need to be patient to wait for a big correction to come before you buy in. And the moment it hits a top, a resistance, sell. Okay, you need to go short term. Okay, so from now onwards, I do expect the whole world to have some resistance in the next few months. Like what I said, it may not happen tomorrow, it may not happen next week, but it may happen in June, it may happen in July. Okay, so just be patient to wait for the big correction to come. You may be able to buy Tesla back at $400 or $500. Okay. Okay, good. Okay, again, the announcement. Okay, two announcement today. Okay, if you want to know about our masterclass, whereby I'm going to teach you all this, the stock investing physical masterclass, whereby I will handhold you through, I will share with you how to buy stocks this year, how to accumulate what kind of assets, and how to execute a short-term monthly trades. Okay, come to this class, but you'll be just 40 packs. Okay, once it's up, sorry, you will be rejected. Okay, because we are still in social distancing measures. That's why we can't accept more than 40 in this room. Okay, and the next thing is okay, just be careful about digital currency. Okay, any digital currency, okay, once the liquidity is no longer around in the stock market, once the liquidity runs out, definitely there's a good chance it will correct, and it will correct big time. Okay, more so than stock market. Okay, because it has gone up multiple times. Okay, so same with all asset classes. Okay, your agriculture commodities, your so-called energy commodities, uh it will also correct. Okay, it will also correct. Okay, so if the stock market react to this double up figure rule, okay, once the liquidity is gone, uh it will be gone in all these asset classes that really multiply its value. Okay, so I don't foresee, okay, some, okay, honestly speaking, I can't touch on too much digital currency things in Facebook. Okay, so if not, I'll be so-called banned. Okay, so I can't touch too much on it, so sorry for it. Okay, but it's time to do some profit taking. Okay, it's really time to do some profit taking. If you have in the last 1 year you have made some money, trust me, like what I said in January, sell away some of your tax shares, profit take some of the tax shares. Okay, and true enough, it dropped. Okay, you can always buy back again once it correct. Okay, so on the 8th of March, I said buy back your tax shares. If you do buy back, you make back the 20% rise, right? Some tax shares already increased almost 10 to 20%. Okay, so learn how to buy and sell. Okay, learn how to buy and sell, buy at bottom and sell at high, and don't hope for a 10x stock. It will not happen this year. Okay, in the last 30 years, every time in the second year of bull market, okay, there is no more 10x stocks. Okay, you need to abolish this dream. Okay, ah this is this year is all about reality. Okay, GLD is gold ETF. Yes, time to buy some gold ETF. Cannabis stock, I will say wait for the correction to come. You can also pick up some cannabis counter. Cannabis, over the last few weeks, it has been dropping crazily. Okay, so it's still in the downward momentum. Okay, but only buy during correction. Okay, only buy during correction. Okay. Okay, good. Okay, I think that's all for today. I do not want to dwell too much on your time. Okay, so the market has already opened. Okay, so even though in the next few days, okay, the stock market continuously, Dow Jones may be up. Okay, today Dow Jones. Okay, let me see the Dow Jones futures. Okay, today Dow Jones dropped almost 100 points. Okay, so there is bound to be some resistance somewhere around there, 35,000 to 36,000, which is almost a double up point figure. Okay, so we have another perhaps 1,000 more for Dow Jones to increase. Okay, there will be a day it meets a strong resistance. Okay, just be careful about it. Yeah, today it has gone down a bit. Okay, so S&P 500 similarly. Okay, resistance area around 4,002 to 4,003, and Nasdaq. Okay, Nasdaq Composite. Okay, definitely 14,000 is the resistance. Okay, to be in. Okay, the double up figure. Okay, so thank you very much for your time today. I call for this meeting after a 1 year miss. Okay, in this Facebook live. Okay, uh because I do feel the last 1 year it has been terrific, it has been magnificent. Okay, you have been making some money, but it's time to really take some money off the table. It's time to do some profit taking. Okay, so be patient, wait for the right time to enter. Of course, you can study my Facebook thread. I will share with you, generally I will share with you where the bottom might be. Okay, so if you want, you can always come to our physical class, whereby I will share with you more in the class, how to know the bottom of any stock or index in a market correction. Okay, so thank you so much. Have a nice day, and I really hope you protect your profits that you made over the last 1 year. But do not let your profits turn into a loss. Okay, I've seen so many people lose money in the second year of bull market run. Okay, make sure you're not one of them. Okay, thank you very much. I'm Daniel Low, and hope that you share this video out to your loved ones in YouTube, in Facebook Live, to as many as possible. Serve as a warning, okay, to some retailers, and try to help as many people as possible. Thank you so much. Okay, bye bye. Thank you.